Can the planet Mars influence stock market crashes? First, a disclaimer. This video is solely for the purpose of data analysis and does not recommend that any course of action based on the information supplied should be taken by an individual. To do so would be at their own risk. Over the past 100 years, there would seem to be a remarkable apparent synchronicity of the planet Mars declination cycle with stock market crashes. Specifically, the synchronicity refers to the planet Mars reaching maximum peaks, north and south, in its declination cycle. Although the timing of the peaks is exact and therefore predictable, the accompanying market crash can occur before or after the peak, which is largely an impact of weak or strong trading momentum and market confidence. Before we start, we need to make some definitions. Declination refers to the angular distance of a planet, in this case Mars, north or south relative to the celestial equator. The maximum declination is when a planet reaches its highest point north, and we're using plus to signify this. Zero declination is when a planet's declination is zero because it is crossing from south to north or north to south of the equator. Minimum declination is when a planet reaches its lowest point south, and minus is used to signify this. A correction or crash. The words can be used interchangeably, but here we would assume a crash to be larger than a 25% decline, with major corrections approaching 50% or more retracement, such as 1929, 1987, 2000 and 2007 for instance. Here we see a table for Mars maximum peak declinations over the last 100 years and the corresponding market correction dates. In the first column, peak, we see the specific dates on which the maximum peak occurred. The second column indicates if the peak occurred when declination was plus north or minus south. The third column shows the number of years approximately between peaks, while the fourth column, max, indicates the maximum degree reached by Mars before turning. The fifth column, crash, specifies the date a correction began, but this will differ depending on the Dow Jones US or FT100 UK date. Poor data for the period 1900 to 1920 makes a specific date difficult. Column 6 indicates if it was north or south declination. Column 7 shows an approximation of the percentage of the resulting drop. The final column represents the number of months before or after the maximum peak on which the crash occurred. In the case of Mars, declination can reach a maximum of 28 degrees north or south, but usually turns at 27 degrees or 26 degrees. As a result, maximum 28-degree peaks are rare, but have two distinct cycles alternating every 32 and 47 years, making them predictable. 1875 to 1907 and 1954 to 1986 are approximately 32-year cycles, while 1907 to 1954 and 1986 to 2033 are approximately 47-year cycles. Peaks and corrections also appear to have a cycle of roughly 7 or 10 years, the majority being 7 years. We are currently in a 10-year cycle as of 2018. Double maximum peaks also occur every 40 years, i.e. 1920 to 30, 1960 to 70 and 2000 to 2010. The next will occur in 2040 to 2050. To clarify the process, we will now look at some examples for 1929 and 1987. In 1929, we see the Mars peak occurred at 26 degrees north in January of that year, with a crash following in October, after Mars had crossed the zero line and was south declination. The Dow reportedly fell 85%. In 1987, Mars peaked in August of 1986 at a maximum 28 degrees south declination. Here we can see Mars has crossed the zero line twice and incorporated a minor peak before the crash occurred on Black Monday in October 1987. Mars was also south declination at the time. The Dow reportedly fell by 46%. Most crashes are the result of bubbles bursting, and the 1987 crash in particular showed the abnormal momentum had been created by the new trading technology of the time. Next, we will look at the crashes of 2000 and 2007. In 2000 and 2001 to 2007, we see the crash occurred before the peaks this time. In 2000, the crash occurred in January with Mars in south declination just prior to crossing zero line. The markets pulled back in 2001 before falling again until March of 2003. Mars was south declination at the time of the crash and at 27-degree peak in August 2001. The Dow reportedly fell 40%. In 2007, we see the same occurrence with Mars having crossed zero declination in May before the crash began in August 2007. The Mars peak occurred in January 2008. The Dow reportedly fell 50%. These charts show the opposite of the 1929 and 87 crashes, suggesting market buoyancy had fallen away and cracks have been appearing. This is particularly so prior to 2000, with minor corrections occurring in 1997 and 1998. Now we come to the present cycle. On the 16th of August 2018, Mars reached its maximum peak declination between the last peak in 2007 and the next peak in 2025. Prior peaks suggest that this is a turning point in the stock market cycle, more akin to 1929 and 1987, as momentum seems high and the Dow Jones invincible for now. Mars' crossing of zero declination has indicated a key trigger point in the past. Mars crossed zero declination in October 2017, so the next opportunity will be January 2019 or October 2019. So buckle up, folks. No deal Brexit and US-China trade wars may just ring the bell.